Hey everybody, welcome to yet another edition of Midas Letter RAW. Now I'm here with my good friend and co-host, Mr. Ed Mileski. Woo! Edward, how are you doing? How are you doing, eh?
Well, you know, here we are. Time's moving on.
I hear you on the West Coast last week.
Just for a quick trip, you know, little business trip.
Little business trip?
Monkey business. You know?
Did you drink anything?
Drank my share. Drank my share. No stranger to the grape.
No stranger to the grape, boy, I'll say. And how was the weather on the West Coast last week?
A lot of rain, but then we had a couple nice days.
Oh.
You know, so just a quick.
Nice.
Yeah,
nice.
yeah.
You're back.
Things never are what they appear to be.
Ooh.
Just saying.
Well, I'll look for more insight into that.
Yeah.
Anyways, this week our show includes our brand new sponsor, NuRAN Wireless Inc., trading on the CSE under the symbol NUR and trading in the United States under the symbol NRRWF. And we have the CEO, as would be expected, as with a new sponsor, on the show today to talk about NuRAN's corporate update that they put out today. And Thomas Rosander joins us today. He's the CEO of Real Luck Group, trades on the OTC under the symbol LCKKF, and trades in Canada under the symbol LUCK. We also have Michael Aucoin joining us. He's the new CEO of Eat Beyond Global Investment Corp. We last had them here in March. Symbol is EATS, and in the United States, EATBF. And yes, and also, who else? Well, we don't have anybody from Voxtur this week, but Voxtur is also our show sponsor and has been for the last year. Voxtur trades under the symbol VXTR in Canada, VXTRF in the United States. Voxtur is digitizing the real estate transactional ecosystem and creating a software as a service environment for all things real estate. Edward, do we need to talk about Bitcoin today?
You know,
the imaginary money keeps going to imaginary new heights.
All-time new high this week, I believe, and I think that's on the, you know, the eve of an ETF. There's now a Bitcoin ETF.
Well, interestingly enough,
so
there's been a Bitcoin ETF in Canada for the last year, or for the last few months, right?
Really?
Yes,
Really?
yes. So the first ETF was in Canada.
Okay.
But because the Americans are coming out with an ETF that's
much bigger.
Well, and the world is now saying, oh, there's finally an ETF.
I don't know. I got to believe that at some point this is going to get very tricky.
Super ugly. Well, let's take a look at a chart, shall we? And just wallow in our I guess, our mutual, well, at least on my part, I can say that I've been wrong.
I am, you know, it's amazing. And if that's not a double top, and it may not be, where can it go? And there's people out there, $100,000, $200,000.
Well, Scott Miner, Guggenheim Funds, saying $400,000 a coin back in September of this year. Actually, I think it was even earlier. I think it was back in the spring. Can't really recall.
Yeah, this is all based on computing power and everything, right? They all have this figured out based on...
Yeah, you know,
like the triple.
You can say anything you want about Bitcoin. Nobody can prove or disprove anything because it's all being made up on the fly. You know, and the you know, the lack of debasement, multiply proven wrong. There's over 2,000 coins. Bitcoin itself has been forked 3 times, 4 times. There's no such thing as no debasement. There's no anonymity, as evidenced by all the people getting caught and going to jail. Dread Pirate Rogers among them. The guy who we think might have faked his own death, Gerald, what's his name, who had the Canadian...
right, he couldn't remember the code.
Right.
That's a good one.
Yeah, anyways...
let me ask you this. You think if a lot of people make a lot of money easy on Bitcoin, then it might affect the morals of society? Or like, let's say...
Society has morals?
You know, Like for instance, maybe it's causing a labor shortage.
Well, I do believe that. Not just that. I think the fabricated gig economy and these newfangled asset classes. So Bitcoin is the king of the newfangled asset class. Alternative gigs, we have like the drop shipping Amazon kids who are, set up a store, program a bunch of stuff, and next thing you know, they're making millions. So the reason that there's supply chain shortages is because there's a labor shortage. The reason there's a labor shortage is because so many people have either taken advantage of the government-sponsored free money that they've been printing as a result and distributing as a result of COVID-19, or they're participating in the drop shipping phenomenon, which is much bigger than anybody really knows, where people go and get a Shopify account, they load up, there's all these apps out there to find the best-selling products. You can find out what prices they're selling at. You create a storefront that sells them for a couple of cents cheaper, and then you fulfill drop ship, whatever, and you're making money like crazy. So the bottom line is, who's going to go to work at a wage job where you got to go listen to somebody yell at you? It's So, and that's having the effect on the commodities. So is it going to have an effect on real world pricing? Yes. Among the many distortions that the imaginary money called cryptocurrency is having on the real world is that it's driving these mutations, I'm going to call them. And if you ask me, the tone and the level of rapture that is being expressed on the part of Bitcoin and crypto enthusiasts who are now multi-billionaires and multi-billionaires is more akin to people say crypto is replacing gold. It's the new gold. I think crypto is replacing Jesus, and that these kids have seen this rapture and they call it crypto and Bitcoin. And it is impossible to show them that this is not only not sustainable, but not realistic. And we're just going to have to wait until the chickens come home to roost before we can actually see that in action. And in the meantime, we're going to look like outdated old farts who don't know what they're talking about. And that's fine. I'm happy to be an updated old fart who equally disdains the rapture associated around Jesus as he does the rapture associated with cryptocurrency. So fine, call me a dinosaur.
And look at this proliferance in the non-fungible token world.
NFT.
Non-fungible. Yeah, well, you know, it's a crazy world, but I'll tell you, if it starts to unravel and, you start to see inflation really get crazy, it's going to incite the spirit of the crowd, right? Who knows what's going to happen?
Well, at some point, I think you've got all these newly minted rich people who don't need to work walking around, so they're not working. We're already seeing the labor shortages around the world.
Right.
The labor shortages are causing the price of commodities to go up and products generally, and causing shortages because people are working less, producing less. So at what point is it that you can't trade a Bitcoin for a loaf of bread because I'd rather have the loaf of bread because I can't eat a Bitcoin, never mind put my hands around it.
You can't even find them.
Exactly. They're mysterious. And what would happen if the power supply got interrupted globally? What if there was a global blackout as a result of a solar eruption?
You know what? You just wonder how it all stays together. Well, it does for a while, and then look at 07, 08. Bear Stearns disappeared over the weekend. Blah, blah, blah.
Well, we'll see what happens. We'll see what happens. Let's not.
It'll be fun to watch.
But speaking of commodities, copper is one of the things we've been watching very closely, and a little bit disappointing at the end of this week. All right, there's copper down at 455 now. Really let's zoom in on this day's action. Look at that.
That's straight down. But look, whenever you see these sharp moves like we saw the last few days, you need some back and fill. That's what I'm calling it. Yeah. Well,
this is to be expected. A little bit of consolidation after.
I think you want to see it hold. I'm going to be realistic here. I'm going to say you want to see 430, 435. I think is a pretty good number. I'm tired
of 430, 435. I want to see $5. Damn it.
Well. Look at this is all. Look what happens in a week.
Yeah.
In a weak moment.
in a weak moment. Well, so it'll be interesting to see. This smacks of interference in the commodities market, if you ask me. The US dollar interests probably selling paper they don't have to drive the price down, because commodity price of copper out of control is likely to upset the status quo, the USD as it were. Look at gold. Let's take a look at gold. I mean, it's almost pointless to talk about gold anymore because it's just so range bound in there, 1750 to 1850 on a good day.
Yeah.
And it's just been doing that forever, thanks to our good friend crypto, Bitcoin.
Yeah.
Look at lumber. Now there's a commodity I wish would go the other way. It's starting to head off this way. Retail prices have come way down to the same prices they were before this started. But with this commodity price moving higher, I think we're going to see another one of these spikes. Anyways, let's start with one of our guests. How about we start with our new best friend, Francis Létourneau. He's the CEO of NuRAN Wireless. Welcome back. Francis Létourneau joins me now. He's the CEO of NuRAN Wireless, trades on the CSE under the symbol NUR, and in the United States under the symbol NRRWF. Francis, welcome back.
Thank you for having me, James.
Francis, it is a pleasure. Okay, so Francis, we're following the story now quite closely. You put out a corporate update today, which announced, among other things, that you were debt-free. So why don't we start there? What is the significance of that? What is the benefit to incoming shareholders?
Yeah, so by the way, carrying this convertible debenture was not appropriate for the company, especially that it has some senior security that was coming with that. And since we're seeking debt coverage for our projects, we needed to clean that up from our books. And it's done now, so we can carry on, and we have all ammunition in our pocket to get going with the commercial banks in Cameroon, DRC, everywhere. And also we have started engaging with development banks, large development banks that have more knowledge on the type of projects that we have. They have more friendly terms for the type of project we do. They understand Africa. They understand everything. So that was, in my opinion, a step that we needed to take forward. And by the way, that was a suggestion that was done by Don Ross that everybody knows on Bay Street, right? Yeah. So he said, "What do you do with that?" When we did the roadshow, we met with Don. Don said, "Look, clean it up, man. You don't need it." So yeah, he was right. So it's now behind us, and we can now carry on. And the cool thing is that the people remaining in the convertible debenture were friendly to the company. Sure. So it's people that will keep and hold and wait for the future of the company.
Okay. You also mentioned that you had, as part of your rollout in the country of Cameroon, the African continent, that you had achieved 46% penetration of your available subscriber base on the first day, where you had been projecting 25. And the question on investors' minds is that going to be sort of anomalous as a one-off surprise, or is that more in line with what is to be expected as you roll out these sites?
Of course, our sample is quite low, okay? But what we did in Ghana, the first few days of connectivity, up to 61% of the population connected to our network. So it's big. And now in Cameroon, we see 46% plus. So it's 1,545 connection out of 3,300 population in the village. So will it be the same thing everywhere? Maybe not, but it's a good sign. It's a really, real good sign. But the other thing is that when we build our business case and we present that to the bank and to the investors, we are extremely conservative in the number we use. So our business case and the numbers we've presented throughout the contracts that we've announced are based on that 25% penetration rate. But guess what? What we receive from the operator is a larger type penetration rate, but we'd rather aim low, achieve high than the opposite. Sure. So we go 25 Everything works with 25, and we are able to generate a 50% EBITDA from operation in Africa with those numbers. So we keep up with this, and we will just have good surprises as we come along.
Sure. And then where you are establishing these services and towers, there is no competition. So it's like if you want cell service, you go to NuRAN. Otherwise, you have no cell service.
No, in DRC, a lot of the sites that we will be deploying will be what we call greenfield, so no service at all. This one, there was competition.
Oh, okay.
Nextel was there, so you see how demanded the service is. So Nextel is close by. It's at the edge of their coverage, by the way. But Nextel is close by. Nextel is the Cameroon brand for Viettel, the Vietnamese operator. Actually.
I see. Okay.
Yeah.
So then, how many sites do you have expected to be launched in Cameroon in this year and next year?
So we're still focusing on having 120 sites going live. Right now, we're experiencing logistic problem getting batteries in the country. Everything else is there. Tower, antennas, cabling, base station, the network has been connected, the satellite dish. We have everything in country. It's just the batteries. I was explaining to you, I think it was 2 or 3 weeks ago, about the fact that there was pallets of lithium-ion battery that burned on the tarmac of an airport in China, and that blocked everything in the summer. So that delayed the whole structure. So right now, the date we have is sometimes in November. Will we be able to achieve all our 120 sites? It's still the target, but we're still progressing. We're accumulating batteries from other countries in Africa. We will be delivering 12 more sites, and there's 4 or 5 being done this week. We have 7 or 8 that will be done next week. So we continue. We don't want to stop, and as soon as these ones arrive in country, cleared out, we're ready to go, because the site acquisition has been done, the site lease agreement has been signed and negotiated with the landlord. Everything is done, so all this pre-work has been completed. So we're just waiting for the goods to get in country to go out there and done. And for DRC, no roadblocks whatsoever at this stage. It looks promising to have the 60 sites live before the end of the year, James.
Sure. So your major telecom partner in all of this is Orange, which is, I think the 3rd or 4th largest telecom company operator in the world. And Orange trades on the NYSE under the symbol ORAN. Having a partnership with such a major multinational is key to your business model. How is it that you achieved this partnership?
I happened to go to AfricaCom like in 2019, and I was not desperate, but we were like, okay, everybody tell us we have the best product out there. Everybody tell us that they absolutely need this to do coverage, but nobody were willing to pay for that. So I sat with Hervé Souquet, the CTIO of Orange at that time, and I said, what if we finance Hervé? And then the meeting that was supposed to last 10 minutes finally last an hour and 30 minutes. And the week after, I was in Paris building that new business model. So we did that in partnership with Orange. We made a model with the minimum guaranteed amount that is bankable, because we've been going through a lot of discussion with different development bank, DFIs. And they were saying that our business model with DRC and Cameroon is fantastic, because it removes, it removes a lot of risk in the equation. And the reason why we're focusing on tier ones, of course, we will do tier twos as we go, but tier ones, they have this paying capability. We don't want to be in a situation where we're not paid by our client, right? So we want to go out there. We want to sign deals with people that are serious, that can make it work. And that's why we're focusing on Orange, MTN, Vodafone, Airtel, Move, and more to come. So sure. We will be focusing on those tier ones. Those are important for us. And Orange is extremely pleased with what we're doing when in the RFP stage with them. Still shortlisted. It's longer than expected. It's not fun. Sometimes you get frustrated because you say, I'm investing. Why is it taking so long? Those are big companies, dinosaurs company. They take forever to make a decision, but we're getting there.
Yeah, you bet. Okay, and then I was also pleased to see that that NuRAN Wireless actually qualifies as an ESG investment for wealth managers and institutional money managers, because your sites are all powered by solar power and the electricity is stored in lithium-ion batteries. So these are actually very green installations. So
Exactly.
how does that sort of impact the attractiveness of NuRAN for institutional money managers?
Yes, we're green. Our social impact is so big. We're connecting people for the first time. We're enabling new economy. You have probably heard about SDGs as well, that was laid out by United Nations, Sustainable Development Goals. So we today comply to, I think it's 11 of those, 8 of those. Our target is to do 11 by 2023.
Sure.
And it's part of our DNA. We're just like, I would say, tech APs, and we want to get things done. We have a fantastic business that lies ahead of us, good numbers, 10,000 site, 5 years, 250 million target revenue in 5 years. But aside of this, we're changing people's lives. We're bringing something new to the planet, and we also save the planet by doing what we do. So it's all pretty much aligned. And for the millennials that wants to invest in a company with purpose, we are that company with purpose.
Fantastic. Very fast-moving story. Francis, great to have an update again. We'll come back to you next week and see how you're making out. Thanks for your time today.
Thanks, James.
You bet. Bye for now. Okay, so exciting times for NuRAN coming. NuRAN Wireless is our latest sponsor. We have an option on 250,000 shares at $1.70 that if the stock goes higher than that, we stand to make money. So you should consider all of our coverage of NuRAN Wireless as conflicted, biased, and otherwise overly enthusiastic for good reason. But here's the reason that I accepted their offer to become a sponsor. It's because they have, do you know how many shares they have out, Edward? 30 million.
Not very many.
Not very many. So
Not,
30 million.
30 million is a manageable capital structure.
And if they start producing $35 million per year in revenue, that's over $1 a share.
$1 a share.
$1 a share. Buck, 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 buck. The chickens will be home to roost then. Woo, we'll be partying then, won't we? So NuRAN had a consolidation, 15-1. So you look at this trading in here. This is when there were 15 times more shares out, or over 165 million.
Right.
And that's when I stopped following the story. So I started following the story way back here in 2016. So as soon as they consolidated the stock, brand new day for the share price.
Right. That double bottom looks potentially very constructive.
Yeah.
You see that? Yeah. Last few months, right around there and right around there. Around, there you go.
Round and round and round it goes. Anyway, so they're starting to roll out these sites, and I think it's going to be, this is why I agreed to accept them as a sponsor, why we accepted the option, because I think this company is going to pay handsomely within a year, and that's why we're doing this. But keep in mind,
how are they set for capital?
They raised $11 million. When did that close? Can't remember when it closed, but not too long ago. So they've still got a big chunk of that. They're financing their cell sites with the debt, as Francis was saying, local bankers.
Local bankers.
So we're going to have a lot of content coming out about this company in the weeks and months ahead. So stay tuned.
All right.
Next up, Thomas Rosander joins us. He's the CEO of Real Luck Group. Welcome back, everybody. My next guest is Thomas Rosander. He's the CEO of Real Luck Group, trading on the TSX Venture under the symbol LUCK. Thomas, welcome back.
Thank you very much.
Thomas, I'm a shareholder in Luck Group, and it's impossible to start the conversation without saying I'm assuming you're as disappointed in the share price performance as I am.
Yeah. It's been a challenge, I can tell you that. it is extremely disappointing for us as well, and for me personally as well. Of course, it's not the situation you want to come into, but it is what it is, and right now it's in an attractive position as well for many, I would like to think. I think that the reasons behind this price is it's a lot. One of them is from ourselves, because when I joined after the previous CEO, we realized that to reach the humble goal that we have to become the #1 esports betting destination, we had to build some things that just weren't in place yet.
Right.
So we had to kind of, if I would have started using all the money invested in us to spend on marketing at that point, that would have been irresponsible, and we wouldn't have gotten the return of investment on that money as we could have. So the right thing was to pull the brakes a little bit and recalibrate our platform, is what we call it. And the good news about that is that we are pretty much there now. So we are super excited to finally be able to hit that marketing spend button and let's get going. Of course, I would have liked to do that from the beginning, but sometimes you just have to roll with the punches, I guess.
Sure.
And of course, the markets weren't helping either. And as I guess investors know, the micro small caps have had a tough time. And after the initial hype of the esports, and especially during the pandemic, investors realized that this is a long-term thing.
Sure.
And esports is not going away, video games are not going away, and esports betting is not going away, and it's not something that comes really fast. The good part of that is that it's pretty much unstoppable, and it's happening whether we like it or not, or whatever the market says. The number of video game players and esports enthusiasts and bettors are growing anyway. So
yeah. I know for a fact that part of the selling pressure is coming from the one of the original financing became free trading partially in September. So August and September are typically the worst times to sell a stock, and often the best times to buy a stock. So what are the main catalysts that I as an investor should be focused on for the next quarter that should make me feel good about holding on to my stock?
Yeah. First of all, I think, as I said, I think the share price is very attractive right now, considering how much cash we have at hand and so on. And when it comes to the catalysts, as I said, like, we have been recalibrating our platform to have the best platform out there. Of course, that's going to be a continuous job, but what we have now accomplished in a little bit more than a quarter on the product side, on the marketing side, and so on, we're going to start getting the fruit of that now very, very soon. And we are in Q4, and I promised before that we're going to deliver this in Q4, and now it's coming. Of course, that doesn't mean that the revenues become amazing directly, but at least we will start seeing some trend. And if we look internally, at least our team are gonna be able to see that all the fantastic stuff they've been building in action. So we're super excited about that. And then another thing, which kind of fits into our strategy, because we are going to be the #1 esports betting destination. That's what we've been building for. But as I said, that's a long-term goal, and that's what we're here for, and that's what we're going to do independently of what's happening, because right now we feel that we're very confident with the money we have and what we're building. But we also realize that there are some other opportunities that can give us revenue in the short term. So we will launch online casino very, very soon.
Sure.
Let's put it like that.
So when you say marketing, you're talking about customer acquisition for the platform, gamblers?
Yeah. So for the ones who are not don't really understand what we're doing, it's about esports betting. So it works like any sports book. Basically, we have an edge on the odds and earn a little bit there. But what is absolutely crucial to be able to acquire players is to have a working acquisition funnel, and you have to have a retention mechanic that is working. This is pretty much standard for all sites, but in this business, it is a super hard competition. You have to have it spot on. You can go at it with a mediocre product, but then you don't get the return on investment on the players you're buying. And that's what we felt, and it was worth doing this. And I understand that shareholders, and we are as well, we're not happy where the share price is, but at the same time, we have a very solid plan. We have the money, we know what we're doing, and now we're about to start. And it would be sad for the ones who have been with us this long not to be part of the next journey of the company, I would say.
Mm-hmm. So at this point, has the player base been growing on the platform?
Yes, it has, but both the player base and the revenues are what I would say not material. Like it's, I've been in the iGaming business for almost 18 years, and you get used to certain volumes, you get used to certain revenues and EBITDA and so on. And this is a startup that had to. We got the boost from the pandemic. We had perfect timing of the raise and the listing, so we're grateful for that. But what we have to build and what we have to do in terms of acquiring players and enhancing our product, that is a plan that can't change, independently on what's happening, and we are executing on that ahead of plan, and we are super confident in that the revenues are about to come, and the player base as well.
Sure. Among the greatest assets that a platform can have in the esports betting world, in my experience, is novelties, being a new player on the block, because the audience is so fickle, because they can go anywhere, they can play anywhere with their money. And typically, if they lose, they abandon that platform and go somewhere else, try their luck somewhere else. So, what is it about Luckbox that differentiates it from other esports betting platforms?
Yeah, I'm very familiar with what you're saying, and it's the same in the whole iGaming or online gambling. Like there's no loyalty amongst players,
unless you deliver winnings all regularly.
Yeah, it's. I think that there are two things here. One is that we're going for the new betting generation. So the ones who are gonna be the future bettors of the world. And they are not the ones who used to go to the Sunday game with the paper slip, or with their father who had a paper slip bet in his pocket. These are people who, they might be playing sports still, but when they leave the training or the arena or whatever, the pitch, they go home and they play video games again or watch video games. So the approach, how you approach them has to be different from a traditional sports book. And I think that Luckbox already from the beginning had a very progressive product that was tailored for that generation. The thing is that you have to evolve it on a daily basis, more or less, because everybody's building all the time. And to be competitive, you have to have the best product. And in my few previous successes as a CEO and with companies, the key is to have a product that they love, of course. And now we have taken the time and we have built something even better on the good thing that we already had. And I'm sure that all the existing competitors in the industry and so on are going to keep a very close eye on what we're doing and what how our product behaves and how it looks and so on. So we have built something for the future, and at the same time, and it's basically it's built for that future generation, and it's also something that really breeds video gaming and that part that we can see that our future audience really that really appeals to them. And we're doing the same with the marketing and the content and so on. And as we're launching online casino, we are using those facts as well. So this is a casino that is built with the same target audience in mind, but I also know that online casino audiences, they are, as you pointed out, they are not super loyal. So when we're going to be new in that space, and we're going to have a casino that breeds video gaming, and that is really going to stand out, and that's going to make all the partners from traffic partners or affiliates, they are going to be interested. We know they all already are. They're already lined up to help us and send players to us. So,
okay. Well, that's a great update. We'll leave it there for now and come back to you in due course. Best of luck in 2022. Thanks for your time.
Thank you very much.
You bet. Bye for now. I mean, this stock has been selling off and selling off and selling off since it went public. And I don't know, will this new marketing program Thomas makes reference to change the course of history, as it were, for this company, or will it continue to slide down lower? Full disclosure, I do have 120,000 shares in this. They are escrowed, and so I can sell 60,000 in December, I believe, and 60,000 in March next year. But my cost basis on that stock was 28 cents. So yeah, I didn't make any money, but I got my money back when I sold the first tranche, which I did just a couple of weeks ago before the interview, before I knew I was interviewing him. So it's not like I'm some Fed governor who's, I'm going to buy this stock, then I'm going to vote on a policy to make that stock go up, and then I'm not going to tell anybody that I own the stock until I get caught. Why hasn't the SEC, the FBI rolled in there and taken these guys out to the wagon in handcuffs? Why?
Well, maybe because they think, they do such a good job in the Fed that this is a good way to supplement their incomes without us having to pay them more salaries.
I would think if I was going to get charged with insider trading, I would, is that not a defense to say, well, you can only do to me what you did to the Fed governors?
Yes.
Which is basically gave me a golden parachute, golden handshake, sent me on my way with a prize basket.
Prize basket.
Jesus Christ. Anyway, so we'll see what happens with Real Luck Group. Again, conflicted. Again, fully disclosed. Again, hope I make some money. I need some money, honey. All right, next up. And we're going to take some questions from our audience. These are questions that are posted on our YouTube channel and or our Twitter feed and or our Facebook page and or written on the wall of our bathroom. Anyways, Logan Smith says he would love to hear our thoughts on BLU and PNG.
Holy smokes.
Yeah, okay, so let's talk about Kraken Robotics here, Logan. Kraken Robotics, we don't know anything about the company. So it started life down here at 15 cents way back in 2018, and now it's trading at 37.5 cents. We'd have to look at the capital structure, but the chart suggests to me that it's going lower. Would you agree with that, Edward?
Well, if anything, it looks to me like it's going to, it's come off a pretty good run over the few years, and now it's losing energy.
And then the other one you wanted to look at was blue, which is Bellis Health.
That's really come off its low. That's tripled.
Yeah, that's a good run. Doubled from 335 to 750, just about doubled. No, more than doubled. But yeah, that looks like it's going to go higher.
But look at the big, there's a big gap there If you go back,
Yeah.
look, they must have got some bad news.
Well, earnings, red. Surprise, lost 2 cents a share more than earnings our analysts estimated.
Okay.
So that would
Sure, but
reduce the sell-off.
but they're coming back to the party.
Yeah. So yeah, one to keep your eye on. Let's see, volume, market cap, 583 million.
Wow.
That's pretty good. So
9 times, so if there's 10 million shares, so 90 million, so there's got to be 50 million shares.
nice and tight like a mouse's ear. All right. Okay, are you guys going to cover the bull run in uranium? Sluggosloan wants to know, Ed.
Yeah.
The bull run in uranium. What's there to say about that? There's less production globally and growing demand as reactors start to get built in China.
You know, I think as the world, you know, moves more and more people from third and second world economies into first world economies, you know, more demand for energy, right? Look at oil. Oil got 83 and changed.
Yeah.
Price of gasoline has never been this high over here. Uranium, and you know, look at France's experience with uranium. It's been unbelievable.
Yeah. So the only thing that could upset the bull run in uranium would be if, for example, there's been a resurgence in the noise around thorium and the molten salt reactors.
Oh.
Which, if those things became commercialized, which they still haven't, but they've got a commercial prototype coming to market in China.
Yes.
If those things were to become the industry standard for nuclear power generation, that would take the piss out of uranium, thorium being very much more abundant and much more easy to handle and with less of the, yeah. So that's one thing that would kill the uranium bull. And the second thing that would kill it is you've been hearing about the fusion energy, where instead of fission energy, where they split an atom to get its power, they fuse the atoms, same process that happens in the sun.
Yeah.
And they are...
I always get those two mixed up, fusion and fission.
Do you?
When
you go fishing. Anyway, so my point there, Sluggosloan, is that I believe that the bull run in uranium is a temporary phenomenon. So, yeah, you could probably make some good money in uranium, but you're going to have your finger on the trigger and the sell button.
The one that I've watched is UCR. I think it's and it's got a warrant and it's volatile as hell. Jumps. A lot of companies have been rolled back. Have you noticed? They're starting to get.
Well, that's the new life of a company. Like, let's talk about XORTX. XORTX is a company that has a drug that I've interviewed these guys.
It's related to kidney disease.
Yeah, this is a good cautionary tale about rolling back your stock. Let's see here, but also this stock is going to have a much more interesting existence. So this is XORTX Therapeutics. They just rolled back their stock. They had how many shares?
It was 12 to 1.
12 to 1.
Big rollback.
Yeah. So whereas with 12 times, how many shares out now?
Now there's with the funding they just did, I believe it's around 13 million.
Yeah, $39 million market cap. Yeah.
12 red days in a row around that financing. So I just smell that someone took their foot off the accelerator and said, you know, we can get a better financing price. I don't know, you know.
Well, the financing closed though, didn't it?
It's closed.
Yeah.
But
okay,
it was priced, whatever it closed at a certain night, that's what it was priced at.
Yeah. So this is obviously short covering in here, I would say, because on an announcement like that, the shorts come out of the woodwork and short it down to the
Well, they'd have to short it in here, right? Probably, yeah. Which they probably did.
Well, this is...
Yeah, there you go.
Let's see, where would the announcement would have been here?
No, I think it was on that last, no, right there. It was one of these bot, you know.
Oh, it was overnight marketed bot deal?
Something like that.
Okay, well, so
like this 7 days ago.
So it went down, then it went up when it closed?
You got the volume in there, and that day the thing traded about 3 million shares, which is 25% of the stock. In any event, there's only 13 million shares. They got $20 million in cash, and they've got a couple of things getting into the phase 3. I wish I knew more about this sector, but the comparables, if you're going into a phase 3 on a couple of indications, a lot of these companies have $200, $300, $400 million market caps.
Okay, Lucas Higsby says, Canada weed stocks are dead.
Yeah.
Uh-huh.
I kind of agree with that.
Yeah, I don't think we're going to argue with you there. Notice that's not a question. He just says Canada weed stocks.
I think that's an exclamation mark you put next to it.
All right. Sandra Cortez wants our thoughts on Visa announcing its plan to bring cryptocurrency services to traditional banking platforms in Brazil. Visa, I think that you're going to see all the traditional banking corporations and platforms jump on the cryptocurrency hysteria because it is nothing more or less than yet another opportunity to make money for any platform that deals in transactions. So of course they're going to do that.
Yeah.
And it's no surprise. And until the G7 gets together and outlaws cryptocurrencies that are not backed by a sovereign entity, which none of them ever will be, the only sovereign-backed digital currencies will be digital central bank currencies. Until that happens, you're going to see everybody jump on the bandwagon because that's just the way it works in this world of manic madness.
Yeah, the ability to make some of the amounts of money being made are just astronomical.
Next up, Michael Aucoin joins us. He's the new CEO of Eat Beyond Global Investment Corp. Michael Aucoin joins me now. He's the CEO of Eat Beyond Global Investment Corp, trades on the CSE under the symbol EATS, and in the United States under the symbol EATBF. Michael, welcome.
Thank you. My pleasure to be here.
I was going to say welcome back, but the last time I spoke to your company, Patrick Morris was the CEO, so you're the incoming CEO. Tell us, what was the compelling logic behind that change?
A bit of an evolution, quite frankly. I think, Patrick did a great job in terms of setting the company up, a guy with a capital markets background. I think as we're evolving the model, the idea is that we become much more active with our portfolio companies. So my background, I've grown up in CPG, consumer packaged goods. So really a commercial and operations guy in that space of sales and marketing and manufacturing. And as we're partnering, particularly in the plant-based food space and evolving on that front, can really help our portfolio companies accelerate in terms of what they're doing in terms of getting the monetization. So our investment profile is we're very much looking at companies that, startup phase that have developed a product, maybe have a smattering of distribution. We come in with our team, which includes some substantial advisors, and really help them drive more distribution, tighten up their branding, develop a solid plan for manufacturing, and then build them out to a monetization event, whether that's going public or sale to a strategic. So it's really along that side. And, I've got the in-depth experience on CPG to really help them accelerate that way.
I see. So now then Eat Beyond becomes more of a strategic investor who participates or advisory role. And okay, I can see where that makes great sense. All right, so then since you've taken over, the last time we had the company as a guest was back in March of this year. What has happened since then?
Well, some reasonably strong development within the portfolio. I think the biggest news, which is just a few weeks old right now, is we've taken Nabati Foods public. Working with the innovator there, with the entrepreneur there, and that's a really exciting one because that was the first one testing this model of that really aggressive advisory role that we play. So we worked with them in terms of, when I talk about speed and acceleration being the key to what we do. Our initial conversations with them were September last year. We were the lead investor in November, then syndicated a substantial investment with some friendly investors that we know behind that to rework their strategic plan in terms of product offering, set up a manufacturing strategy with them, increase their manufacturing capacity, and took them public a couple of weeks ago now, and it's hit the ground running. So a lot of value creation in the run-up to the IPO, and then post-IPO, it's been performing very well. So that's a great example of what we're doing as a model. And again, we're looking at rehoning our portfolio to really focus on that plant-based foods displacing animal protein space. As we look forward, we think there's a huge tsunami of consumer demand, quite frankly, about to come on that front that we're looking to capture and help our entrepreneurs and portfolio companies capture that value as well.
Mm-hmm. So that's the interesting thing about your company that really intrigues me, is this idea that we're moving into an era where meat-based protein consumption is quickly being replaced by plant-based protein consumption. And that's all part and parcel of this idea that, well, we've got to take some serious steps to get this climate change under control. And it intrigues me because I've looked at over some of your press releases, and my studio is out here in Dunnville, Ontario, which is a bit of a backwater. It's only an hour and a half from Toronto, but still, it's a very quiet little community. And so Sobeys is my go-to grocery store here. And so it was heartwarming for me to see that some of your portfolio companies' products are in my local store. So I'm actually going to be able to go and try those. So now at this point, your participation in these companies financially is as a minority investor?
Yes. Yeah. And one of the changes, even with Nabati, quite frankly, our investment was modest. I'll put it that way. The initial capitalization of Eat Beyond was reasonably modest. So we've taken small pieces of participation in most of the companies. That's something that we will be changing. We currently have a prospectus filed for another round of financing, which will give us the ability to participate to a greater degree. Again, using the Nabati example, we only hold about 2.5% of the company. And we syndicated the rest of the investment because we weren't capitalized to the point of being able to do that. As we move forward, we will want to take more material positions. In some cases, we may take majority shares. That's not necessarily the rigorously what we're going to do as a model, but we will take material shares. So you'll see us taking 25, 30, 40% of companies as we invest all the time to help them accelerate with our advisory roles.
Right. So then it strikes me that, as an outside observer of the company, I haven't been a shareholder, but it looks to me like you've kind of raised a little bit of money to prove the concept. Now you've proven the concept with these early acquisitions to the point where you've got institutional interest for beefing up the war chest, so to speak. So then is there an intent to increase your positions in the companies that are succeeding, that are already in your portfolio, or would you be more inclined to diversify the portfolio across additional companies, or is it sort of a combination of both, very circumstance specific?
Yeah, absolutely a combination of both, circumstance specific. So in terms of some of the companies, where they need additional fundraising and they're on the right trajectory, we would certainly entertain putting more money into them. But as we look at it right now, there's a tremendous amount of opportunity broadly in the marketplace. I think I've been here for just over 12 weeks now, and the one thing that I'm pleasantly surprised by is, one, certainly the amount of opportunities to invest that are being brought to us. I think we're building a good name in the industry. And then equally, the amount of investors that are willing to figure out how they can participate with us. So very positive on that front. So I think we definitely want to broaden our portfolio. We'll be broadening our advisory group as well to be able to handle that workload as we're building it out. But I think there's a lot of value in that. And it quite frankly gives our investors the ability to just have a broader portfolio they're investing in. Again, for us, what's relatively unique about Eat Beyond as an investment issuer is we're investing in pre-IPO companies typically. That the average retail investor simply doesn't have the ability to invest in. So for people who are really passionate about plant-based and kind of the evolution of food, we're giving that retail investor an opportunity to participate in that and get in at the early stages and reap some of those benefits. Quite frankly, where we see our biggest gains are during that acceleration phase, bringing them to monetization. So we'll focus most of our investments pre-IPO as opposed to post-IPO. But
I'm wondering, is it your expectation or your observation or experience that this evolution of new consumers towards plant-based proteins, are they coming from previously being meat-based protein people, or are they basically, is it a new generation of people arriving into the consumer world who have never been meat-based protein fans, have always been plant-based protein consumers, and that is the growing population? There's a few things that motivate this. Certainly there's the environmental story in terms of the world. And
feeding the world at scale as the demand for protein is going up is simply unsustainable with animal protein. So that's number one. Number two, there's individual health as people are trying to figure out how to consume healthier for themselves. And third, there's animal welfare, that plays a role. So all three of those motivations filter into to the different generations differently, quite frankly. But we're seeing this tremendous growth in demand. And I think so for plant-based, and what you likely see at your grocery stores, you're seeing the initial stages of this conversion. I think for us in this space, it's incumbent to ensure that as people try for the first time, so a lot of people are in trial mode, that they're having a great experience. Early stages of plant-based protein maybe weren't quite so good in terms of replicating what people's expectations were of the experience of animal protein. And they're getting better. They're not always there yet, but they're getting better. And they would astound you in some cases how good they are. But we need to make sure that we're there. So as people are trying, we're attracting them into the category and getting them to repeat. So that's a lot of what we do with our portfolio companies as well. And how we filter them is, how good is the quality of the product? How good is that consumer experience as they're engaging with the product?
All right, Michael, that's a great update on the company we're going to continue to follow. Thank you for your time today.
My pleasure.
We'll talk to you soon. Bye for now. Oh, there's the stock that has seen greener pastures, better days, bluer skies.
The valuations really get...
You want to see why this stock is so low? I'm going to show you exactly why, and it's called capital structure. And this is why I always like to make the point that you want to find out how the company was initially capitalized. And if you look at these prior sales, so this is their Form 2A listing statement. And back in 2019, when this company was first put together, they issued themselves 5 million common shares on February 5th, 2020 at half of a penny. They issued 7.3 million common shares at 2 cents.
Yeah.
So, and then just for your edification, you can see that there was a full warrant issued on those financings. So these of the fully diluted shares, this constitutes 14 million plus 10, 24 million shares.
No, it's 28 because there's 5 and 7. That's 12.
Right.
And then another 12, 24.
24 million shares at below 5 cents.
You can sell at any price you want and you still make a lot of money.
So, I mean, it sounds like Michael's going to do a great job, but they're going to have to do something. Yeah. I mean, you're not going to make any money till all that stock
How
is
many
sold.
shares are, maybe a rollback.
A rollback. Well, let's go look at the insiders and see who holds these shares. So, Jeff Balderson. Direct ownership. 50 cents. He either doesn't have any more of the cheap shares or he never participated in the cheap shares. Ravinder Kang. Oh, costs $4.16. Okay, Ravinder, boy, he is definitely not on the inside because there are no cheap shares in his pocket to be reported. Great, Patrick Morris. No cheap shares there either.
Well, you know what?
So there you have it. Management.
You mean the invisible man guy?
Well, this is one of the standard defects in the Canadian capital market system is that a guy can have essentially a control position for cheap shares, but if he's not an officer or a director, after he sells all his stock, he doesn't show up in the insider list.
Right. Oh, I get it.
So, all those shares are out there, but we just don't know where they are. Unless the company did a consolidation, we don't know. We'll follow up and find out later.
We'll find out later.
Anyways, that's our show for today.
Keep your head up.
You have yourself a good day. Write us a letter and tell us what you think and tell us some questions.
Keep your head up.